is April Fool's Day, April 1st, and this market is just as foolish as it has been every single day. Let's get into it because I really want to get to my very special guest who I'm super excited about, Bill Tung, and he's going to teach us about a lot of things. He's got a really crazy, awesome resume on the supply chain, but also really more than anything, my favorite stuff, textile apparel and footwear. Girl loves to know what was going on in the shopping world and what it actually takes to make all these beautiful things that we all buy. But we're going to get to that in just a second. I want to do a couple of really interesting cleanups that I saw that I think just news flow items that are a little bit something else, so to speak. Sharing screen. Okay, economic news flow. We had two numbers that came out actually pretty good, but I want to kind of just show them to you. The first one was jobs. Jobs came out better than expected by quite a bit. Non-farm payrolls, that's basically everything that is not a farm related payroll, but a lot of times services are in this number, but the unemployment rate continues to decline. And remember, at 4%, people were like, ooh, that's already really getting lower. 2% is really the number that we historically are looking for full employment. And at 3.6%, this number just keeps cratering. So we are getting job gains, but in particular, the areas that have really struggled to see improved headcount. That's like leisure, hospitality, more or less the travel services area, not necessarily airlines here. We're really talking about hotels and lodging, that sort of thing. Those actually benefited. And then retail, trade, and manufacturing. But what I want you to see and think about there is it means that we are definitely reopening at last, so to speak. So that's a very bullish sign. The other thing that was a little bit bullish on the two areas that you guys know we've been really excited about. We've talked about the fact that the U.S. economy is significantly stronger than some of the places overseas. This is reaffirmed. We got a good data point, although every day is a new day. But we did get a good data point out of the PMI numbers that came out this morning. And also, you guys know I've been so bullish on Brazil, and it's mostly because of the raw materials industry there, as well as the agricultural industry. But manufacturing, which is still a pretty sizable component of that index, started to go straight up. Now, you guys know I've been a little bit, if not even a little bit, a lot cautious. The Eurozone, we are starting to see PMI slide aggressively in March, which is to be expected. Now, the other thing I would mention too is Asia as a region in general, after being kind of up in the previous months, started to show some weakness. In particular, China did show some weakness. They're saying it's because of COVID, et cetera. At the same time, we've got already the Chinese government saying that they are going to make sure to have adequate fiscal policy to take care of any of the COVID policies that they're currently enacting, and not have it impact the economy so much. Already because of Ukraine, Russia, and the weakness in Europe, there is some forecast and some chatter about whether or not there's enough in the international trade space a bit to kind of make up for that. So that's just an unknown in some ways. Some people have one opinion, some people another, and it's really exciting to hear what people have to say. In general, though, you should know last year, China had really crazy GDP growth, as it usually does, at 8%. So relative to last year, the world was already thinking an official target to be around 5.5%. So slower than last year, but still a very strong number for China. So that is going to continue to be in the news. It's going to be continuing to affect the stocks. I found it very interesting that with all of this, they also went ahead and started to turn in some of these documents, handing over reports, auditing reports to the American regulators to just try to take some of the pressure off of the Chinese names that have been trading very wildly on the exchanges. That said, they kind of rallied aggressively in the morning and then bloop, as far as middle of the day goes. And you can kind of see right now, the screen is very mixed. And also the indices, which were up on the day, are now down, and oil is down as well. Now, we had talked about yesterday that since it was end of quarter and now this is the first day, April Fool's Day, if you will. Do I think any of this is enough to really say, oh my gosh, there's totally a direction in this marketplace. I know which way it's going. Absolutely not. So apparently we're just gonna have to wait till Monday for that. So that is what it is. And so if you are buying in this market, if you are selling in this market, I think it's better to have cash and take profits. And if you can't take profits, you may want to just think about hedging. And we've talked about that all along. But it is we're going to just have to see what happens on Monday in this marketplace. And with that, I'll pause for a second for questions related to markets before we get to introduce our very awesome guest. David, do you have anything that you want me to address before we go to that?
Yes, please. Excuse me. The China news on the regulation. Do you think there's anything to that?
Which portion of it?
Well, they're saying they're going to allow more leniency as far as, or China said they were going to start disclosing, I guess, financial information, which
it's really what they're doing is it's this article. It's really just allowing the U.S. listed companies to hand over the reports that were requested in general. So when they file, many of them already file properly. It's all good. Alibaba is absolutely using, I think PricewaterhouseCoopers, don't quote me on that, but I think they're using PwC in Hong Kong. So most of the companies are just mature enough to be doing the dual listing in perfect order. There's a few that probably need to do a little bit better as far as that goes. So I think that's really all it is. As relates to DD specifically, because I know you're always really, really laser focused on that. I'm not 100% because I know the issue that you're probably driving home to is whether or not they're allowed to release their data related to where the autos are going or more detailed data in the company. I'm not sure that this is what this is about. You know what I mean? And in reality, even if it were Uber or something like that, we, the investors, don't get access to all of Uber's underlying data unless we're like a very big shareholder. So I can't see that necessarily. If people are reading it that way, I would say that's aggressive. That's an aggressive interpretation. So I would be potentially thinking that was the right way to read it. It's more just on the accounting stuff, the additional accounting requests that our exchanges are asking for. Was there something else you saw though that made you think otherwise?
No. It had little to do with the security. It's just the numbers. To me, that's really a step in the right direction.
Yeah. In
maybe
fairness,
they like money versus hate money, right?
Access to the capital markets is always a good thing. I think my point there isn't that I think if we're going to go through this and that is probably a longer discussion that we should have maybe on Monday or so. The capital markets between China and the US are such a special thing because yes, China has been, for especially the last 20 years, integrating into the global financial community. It has absolutely as well always been very, very clear that it should do so without having foreigners have control of its economy. So it is always kind of this game of like, how do we apply the pressure correctly? And how do we not end up in a remarkably strange situation? I think that, yes, this is great, right? And it's probably good timing, especially because there's this other news flow that would otherwise really crush these stocks if it wasn't that you were also getting this kind of more compliant Chinese response. But at the same time, China's a little freaked. I'm sorry, I'm just going to say it. It's an opinion, but I do think China's a little freaked out at the way in which we sanctioned Russia. I'm just going to say, because it is actually legitimately their worst nightmare of what might happen. And part of the reason why they've always been so adamant about things like A shares and B shares and coming through Hong Kong and, hey, Didi, what exactly are you doing by bypassing and not doing a Hong Kong listing? So those things are also true. I think that it'll be really exciting from a history perspective, maybe a little too exciting from a markets perspective to see what happens in the next 6 to 9 months. But it's I think that balance will continue as we work through the global economy and COVID and all the other war and things that are happening.
Thank you, May.
Okay, cool. Well, we are going to now move to my guest, and he has such a crazy long resume that includes working in Asia and then working in the US and then all these amazing companies. I'm gonna actually let him introduce himself a little bit so I don't mess it up on accident. Bill, come and welcome to the show.
Thank you, May. pleasure and an honor to spend time with you. Yeah, I've had the good fortune in my career to be managing really the whole go-to-market revenue, sales, marketing process, online, offline, mostly in the sports apparel footwear sector. Yeah, I've been based in Hong Kong. I've been based in Tokyo. I've been based in London. I've been basically in the States the last 20 years, though. Brands such as Reebok, Columbia Sportswear out in Portland, Oregon, New Balance, which is here in Boston, and Fanatics, which is one of the largest licensees of sports apparel these days. So yeah, so my focus was really, I mean, certainly working with the supply chain colleagues, but really figuring out that puzzle of how to go to market, build brands internationally for mostly American companies. And so a lot of American companies still trying to figure that piece out, quite frankly. So.
That's amazing. And I know that you've got a lot of experience in fashion and footwear retail, which is right. Can you tell, is it okay if you tell us some of the brands that you've worked with before? So that
well, yeah. So it's mostly been in sportswear. You know, like I said, with Reebok, Rockport, Columbia Sportswear that owns several brands like Sorel, Mountain Hardwear, and Prana. And then over at New Balance, I do have a consulting business, and I do work with a bunch of different brands around the world. So yeah, everything from True Religion denim to Eddie Bauer to Kendall and Kylie footwear to what came up recently, Steve Madden. So yeah, so we're working with a bunch of different brands, just helping them figuring out their go-to-market strategy, whether it's in Brazil or China or the Middle East or wherever it may be. Yeah.
Now tell us a little bit, because everybody's kind of always been curious during this COVID crisis and all the shipping and stuff. You know, our clothes we all kind of probably generally know our clothes are not made in the USA for the most part. Can you talk about like where some of the things are sourced and how they're made and how like production actually happens to get shoes to market, that sort of thing, or clothes to market? Like how should we think about which ports, which countries that we should be watching if we're really big into apparel and retail, that sort of thing?
You know, that's a really good point, May. I would venture the vast majority of consumers don't have a clue, don't really care where their shirt or their shoes are made. You know, it is all labeled made in fill in the blank. So certainly, you know, I think if we go back, May, I think people look at today, but if we go back, you know, a lot of people think that a lot of the manufacturing went from the United States directly to China. In the 90s in the 90s. And that's really not true. You know, a lot of the manufacturing was already being done offshore. Where was that being done? South Korea, Taiwan, Hong Kong, Indonesia. And so certainly as cost of labor increased in those countries, small populations, China opened up its economy, special economic zones, a lot of that manufacturing then went into the coastal cities of China. And who were these factories owned by? They weren't owned by Nike or Ralph Lauren or Gap or Levi's. These were owned by third-party vendors who they were sourcing from in other countries. So certainly they migrated into southern China there. But now we do see a migration out of China. Certainly for labor-intensive manufacturing. Where is it going to? It is going to places like Indonesia and Vietnam, Bangladesh, India. I mean, there are towns in the Pearl River Delta that used to employ hundreds of thousands of people in footwear manufacturing, all gone. Those jobs are all gone. Well, what are those people doing? I think they moved up the food chain, just like the people did in South Korea, Taiwan, Hong Kong, and Singapore. Now they're making tech, high tech, semi high tech, but that labor intensive manufacturing definitely has been moving out of China for quite some time.
Interesting. So mostly it's Southeast Asia within the Asia region. And then are there other places?
Yeah, certainly Bangladesh, Pakistan, and India as well. So it's even moving over to the subcontinent. So yeah, I think there's been some manufacturing that's gone into Myanmar, Burma, but there's been some, I think the one good thing is most European brands, they have pretty significant manufacturing requirements for the factories to adhere to. And so some of the factories in Pakistan, Myanmar have had a little bit of difficulties getting qualified from a regulatory standpoint. But they want to do business with the big brands. That they really have no choice but to adhere to these rules and regulations that are being asked upon to get qualified as a supplier.
I definitely want to talk about that because I know people are very focused on like, how do we think about the brands that we do and what kind of diligence they're doing on their factories and such? Because if you're an investor, you feel like when you find out some things, you're just like, oh my gosh, did I really help them do that? That's horrible. So can you tell us a little bit, like definitely expand on that point?
Yeah, I mean, I think I would safe to say that most major American companies have very stringent sourcing requirements from the factories. Obviously, age, overtime pay, the health benefits, time off, lighting, security. I think all those things are done. Most of these major brands have offices across Asia. They do spot inspections on these factories, and this factory, and that's part of the compliance. If you wanted to be doing business, if you want to be supplying brand A, B, C, or X, Y, Z, you got to sign up to do all these things, and you have to agree upon these spot inspections. What do you have to hide, right? So I think that's the important thing that's been going on. So and some factories that may not want to or can't adhere to these regulations, then aren't going to get the contracts with these big brands. So.
Wow. And is it like a very long process to try to get it
Yeah, oh yeah, for sure. It could take up to a year, a month. I mean, especially depending if it's a brand new factory or what do they need to do. But they need to prove all these compliance issues that I mentioned before. And is it onerous? It can be, and it should be. But these are things that weren't in place. I would say back in the mid '90s, and really didn't start popping, coming to the fore in the last 20 years, quite frankly, as being something that companies should be doing. Because before it was just anything goes, quite frankly.
Now, what do you think is the biggest trend that you're seeing these days within your space? Like, what do you think are some of the there's so many new trends that we're seeing as far as like investment goes, but like, is there a certain type of style that is really like, are there certain areas where this is no longer interesting in footwear anymore and this is very interesting, or this is, how do you even start to get your arms around what's cool these days?
Yeah, I think May, if we look at from 2 years ago till now, we look at this as the COVID era or the COVID 2 years. Some brands have done really, really well because of people working from home. Brands such as Lululemon, Crocs, any running shoe brand has done well. Bicycles have done well. Peloton did very well. Because people are spending more time at home. So I think the question is post-COVID. When that happens, if that happens, if people going back to work 3 days a week, 4 days a week, 5 days a week, how will that impact those brands? And obviously, brands that didn't do well during COVID, nobody needs a new suit and tie. So obviously, you imagine suit and tie business has not done well. So that or formal apparel, because you're hanging out at home. I'm hanging out at home. You're hanging out at home, and it's okay that we just throw on a shirt that maybe isn't perfectly ironed. But I think that as people change, post COVID, start going back to work, are they going to be buying more dress shirts and more dress apparel for men and women? I think I already read a report that was already happening, because people's like, oh, geez, I haven't bought a suit or a jacket or a tie or a dress shirt in 2 years, so it's time to freshen up the wardrobe. So I see maybe that trend happening. And then the question is, what happens to the Lululemons and the running brands and the Crocs of the world that did benefit during COVID?
Interesting. I don't know how much I love this casual world, but some people are really excited for it. Still, girl, I like to dress up a little bit. I have a really kind of random question. I'm not sure it's within your wheelhouse or area, but I was curious if you I always feel like everything still gets shipped out of like Vietnam or China. Is it true that countries just directly ship from their country, or how's it all is there some kind of insight you can give on how things move around the world within your space?
Shipping. Well, yeah, I mean, the vast majority of the goods, products, and apparel footwear is put on containers. It's only in very drastic cases you're going to air freight something, because you got to. That's a very small percentage, because it's very costly to to do so. But yeah, no, it's usually it's coming from the country of origin. So if it's made in China, it's going to get shipped out of China, made in Vietnam, made in India. I mean, as some brands will consolidate, so they'll take production from multiple countries and they'll consolidate in Hong Kong or in Singapore and ship and then put it all into 40-foot containers to ship across the ocean. But no, if you can fill up a 20-foot or 40-foot container from the country of origin, then you're going to ship it from there, because you certainly want to less hands, the better. Less hands, less point of contacts, the lower the cost, the better, and time. Cost and time. So how do you get things from point A to point B, from the factory to your warehouse, into the retailers, retail stores, or directly to consumers here in the United States? Yeah.
Cool. Okay, so I'm going to open it up for questions for just a second before we continue onwards. David, did you have any questions?
Yes. Hi, Bill. Lululemon, are they manufactured in Canada?
Well, they're listed on the New York Stock Exchange under LULU. They're based in Vancouver, British Columbia, Canada. I don't believe they manufacture a stitch in Canada. I imagine most of their products are made in Asia. So,
yeah, I knew they were headquartered in Canada. Do you? Yeah. I mean, they make a superior product, in my opinion. Do you agree?
Yeah, I probably own one or two pieces myself. My wife owns a bunch, and she swears by Lululemon. The retail price, it's you can find a lower cost alternatives, but I think the price value quality is right up there. So I've been happy with the product. So is my wife. It's a very interesting brand, because if you think about it, they started off as a women's only. Right. Yoga inspired yoga. In fact, the logo looks like a woman's head, right? And then, I was in the store the other day. Probably 40% of the store is now men's merchandise, which I was quite surprised to see. So it's good that they made this transition, that they are not just relying on a one gender brand, and that they've been. It's really difficult to go from women to men, quite frankly, as opposed to just starting off dual gender. But I think they've done a very nice job about that. I think, and then they just launched their own footwear brand as well internally. So I think that's a nice product extension for them just last week.
Wow.
Oh, cool. Yeah, footwear was my next question. As far as fashion trends, is there a particular city or area that you look to? It used to be London. Maybe. Yeah. Is it still London?
No. Really interesting point. My daughter was studying in London this past fall, and she had to go get a pair of Doc Martens at their flagship store on Carnaby Street in Soho, London. And I don't know. It's odd, because I was just on Newbury Street 2 weeks ago here in Boston, and the only store that had a line of people waiting to get in was the Doc Martens store. So is there something going on with Doc Martens right now? Perhaps so. It's a brand that's been around obviously for decades, and it comes, it goes, it comes and goes. So maybe it's time in the spotlight right now. So
good. Thank you. Good to know.
Now, what is going on in China? So many of the companies that have reported, in the sense that, it seems like China's sales have been really, really high. Is there something unique about this market that we just need to try to understand? Oh, no, you look like, did I stump you? Or is it, I know you work primarily to help them. I'm just curious.
Well, no, it's interesting, May. I'll address it from the athletic footwear standpoint, where, for many years, Nike was the number one market share. It no longer is. I think it's been supplanted by Anta, which is a mainland Chinese brand. Li-Ning is probably number two right now. There's some others, Peak, 360. I'm probably off the top of my head, I'm forgetting a one or two. But every athletic footwear brand is in China today. They've been there. Nobody's just arrived. I mean, it's Skechers, Puma, Adidas. Yeah. They've all been there. But I think what's happening in China is a degree of brand nationalism or brand patriotism.
Interesting.
So certainly, one really couldn't argue that Anta or Li-Ning would have the same cool factor to a 16-year-old kid in China versus Nike or Adidas. But there is this trend towards the domestic brands that, it's an interesting concept, what's happening in China. I think that there was such, again, trouble by saying this, they were such fashion victims. We've seen them, May, right?
It got better. It's really uptick. Recently, I'm not cool enough.
Yeah, they just needed to have a logo, head to toe. Everything had to have a logo on it. But I think as the consumers become more sophisticated and I think they become more aware, I do believe that there is going to be this trend of brand or consumer patriotism. There's so many domestic mainland Chinese brands. I think that that's going to head in that direction. Not that the market's not going to be great for international brands. It is. I mean, it's the number one market for Nike outside the United States. It's the number one market for Adidas outside of Europe or Germany. Obviously, it's significant for many brands, from Starbucks to KFC to Columbia Sportswear, where I worked before. So for many brands, it is very, very relevant and very important. It's just that they're going to find much stiffer competition now with domestic brands.
Now, you had said something really interesting, I remember too, and I don't want to forget to ask you this, but you had said something about how the footwear stores are changing dramatically, and in a lot of ways they will continue to disappear. Or did I understand you correctly when we were talking?
What's happening obviously just with the whole online shift, it is going on. So if you look at a brand like Allbirds out of San Francisco, that's just a few years old. Their strategy was very much an online strategy. A handful of stores are in the United States, Boston, Soho, New York City. They're out of San Francisco, so I'm sure there's one. But it's not like they've got hundreds of stores across the United States. They don't seem to be wholesaling to department stores. So you're either going to buy it online or you're going to buy it from one of their stores. And so that's why it's very much that direct to consumer trend, or that's their strategy. So they get nice high margins. But there's a cost to acquiring those consumers, and this is what Nike is doing right now. I mean, the CEO is from eBay, and he came on a couple of years ago. His name escapes me, but it's all about a DTC strategy, and they've stopped supplying many retailers here in the United States, across Europe, because it's just not worth for a company that size of almost $40 billion to be servicing a little mom and pop running store brand or running shoe store. So they want to direct that traffic to their websites and their direct to consumer business where they get higher margins. So
maybe good news for the specialty brands or so.
You know what? So you look at brands in the running category like Hoka. Hoka. It's the sister company of Uggs. So that's under Decker's brands, DECK. So brands like that, brands out of Switzerland, ON, that's just emerged recently. So there's going to be, if the retailer doesn't go out of business because you really can't run a athletic shoe store without Nike product, then there's an opportunity for other brands that haven't done so well. Reebok, for example. So
it's kind of amazing to me that shoes have been online. There's got to still be a need for a store and trying them on, or is that just our fuddy-duddy older generation? Slightly.
Well, I think that was. If you look at the Allbirds case, they're public listed now. BIRD. I think that was their thinking. It's like, well, okay, we're going to get it out there. We're going to be online, but people still need to smell, touch, feel the brand. So they did put up, a number of stores in pretty high profile locations, not large stores. They don't need a lot of space, but there's a lot of overhead. There's a lot of costs. Whether those stores are profitable, probably not. Is it good for marketing? Yeah, they probably chalk it up to a bit of a marketing expense there.
That's amazing. What about some of the other brands? Now you do outerwear. It's been such a bullish market in outerwear with everyone wanting to be outdoors. What are people's thoughts? Is it going to continue? You think these are habits that people have really adopted, or what's your thinking?
I think because of COVID, people are going to spend more time outdoors. It's interesting. 20 years ago, I was living in Hong Kong during the SARS epidemic, and so certainly the beginning of 2003, certainly a lot of people were just spending more time outdoors. It's not like they were climbing Mount Everest, but just spending more time outdoors, in the hills, in the trails, camping, light trail walking, enjoying Mother Nature more. So that was in Asia. And I think that's what's going to happen here in the United States as well. People are just going to take advantage or not take advantage. So, hey, let's not be inside. Let's be outdoor. So I think that does bode well. I think we need to look at participation, at the national parks, which had been declining. I think they keep a record of the visitors. But, it's not like everybody needs to go to Yellowstone or Yosemite to go enjoy the outdoors. You can go do it in your local park, even if you're living in a city. So, no, I think that that will continue. I think what's been very interesting the last, I could say 5 years in the outdoor apparel space is brands at the premium price points have really come to the fore. Brands like Canada Goose and out of Toronto, and Montclair out of Europe, or France or Italy. So it's like, okay, they're selling outerwear, but it's like nobody really sold outerwear at those price points before. And so,
price points.
Yeah, I mean, $1,000, $1,500, $2,000 for. I was like, wow, okay, so that's sort of going after that fashionista brand. So, does a Columbia Sportswear jacket keep you warm and dry? Equally so, yes. At a fraction of the cost, equally so, yep. But those brands.
Is there really nothing better about it?
If you want to spend $2,000 and think you're warmer, all the power to you. That's great. But Patagonia, North Face, Columbia Sportswear, these brands have been around for a long time. Columbia, North Face, very, very global in their footprint around the world. So yeah, when I look at brands, very often, I look at brands, especially if they've been established here in the United States for quite some time. Then I try to figure out, do they have an international presence? And you got to think about, okay, the U.S. population. Most people don't even think about this. Okay, 330 million people. That's 4% of the global population. Huh. So you might want to think, well, what about the other 96% of the people out there? Okay, and then you got to think about, okay, well, then we got to look at purchasing power and GDP. Okay, the United States, even though we're 4% of the global population, we're about 24% of the global GDP. Okay, fine. Then you got to think about, what about the other 76% out there? And so, there's 192 countries in the world. Obviously, you're not going to be selling to all 192 countries unless you're a Coca-Cola or somebody like that. But certainly, there's probably a handful of countries that you could be generating at revenue and diversifying your revenue base. So,
So as we look to the emerging markets, I guess it's the hit list that we're thinking about as far as like which countries in particular are always like when you're on your side of it, are you always like monitoring certain countries, or how do we think about that as different countries kind of improve? Or
yeah, well, I think to start with, we can no longer consider China as an emerging market from a consumer brand standpoint. And if you're talking from the luxury market, it's not. It is the dominant market. Chinese consumers are going to be 50% of the world's luxury market. So we can't even talk about China as being emerging. But I think people, have been talking about India as a market, certainly a population equal of size to China. The regulatory to import has been relaxed significantly the last 10 years. So I think that's an interesting market that's the potential is still there, hasn't developed as quickly as China, but I think there'd be a good bet there. What's happening in China. Brazil's always been a challenge because sort of the same reasons with India, high import duties. They don't seem to be relaxing those very much. So I think that's sort of more of a neutral stance on Brazil. And, at one point, Russia was a very good market, but obviously right now it's rather difficult to be doing business with a collapsing currency.
Yeah.
There. So, yeah.
Interesting. David, do you have any questions? I don't want to dominate this of you.
I do not. It's awesome, Bill. Thank you so much.
Bill, do you do anything with tapestry? I'm just curious because I from time to time want to love that, but then I just can't get it at the right timing and stuff. Like what's going on with those brands? Coach, is it like Coach, Kate Spade, those guys? I think it is.
Yeah, Coach, Kate Spade, and Stuart Weitzman. I believe, right? Yeah. So certainly really focused on women's fashion.
Yeah.
I don't, not to be insulting to them, that you could call that affordable luxury. Not quite
It
at
is.
the
I mean, it really
not
is.
the, it's not the Louis Vuitton of the world, or the LVMH or the PPR of the world. But I think that group there, when you're dealing with fashion, May, the wind blows. Man, that's you better have your finger on the pulse.
Interesting.
And what's hot today, surely it's not going to be hot tomorrow. How many brands can sustain themselves? Oh, that's really hot right now. Okay, great. It's like, I don't know how many years ago was I walked by an Abercrombie and Fitch store the other day. It looks nothing like the Abercrombie and Fitch store from 10 years ago, right? I mean, they completely transformed their marketing, their imagery, gone are the naked torsos. And now it looks like, it's not really interesting. So they had to change.
Changing. I know how I feel about it sometimes.
Yeah. So it's. I mean, I've got two kids in college, as you know. And so did they shop there when they were in junior high school? Yeah, but not really since then. But yeah. I think Tapestry. I think they're just right there. It's is Coach on fire right now? Is Stuart Weitzman on fire? Kate Spade? Yeah. They're just sort of really just right there, and they will do just fine, I'm sure. Coach obviously very global around the world. Kate Spade less so. Stuart Weitzman a few places around the world, but Coach is certainly very developed globally around the world with their revenue base. So old brand. I mean, I think I have a leather Coach briefcase from the early 90s. I mean, this is a brand that's been around for quite some time. So yeah.
You bring up a really good point. Can you walk through how far in advance, what is the cycle of how far advanced someone is thinking about? So I get the impression that fall is done well in advance of fall. Otherwise it would be this
fall 22. Yeah, of course. Yeah, brands have already had this is March of 22. Yeah, they've had their sales meetings for spring of 23 already. And if you're a designer or product manager, you've already, you're working on fall of 2023, if not spring of 2024 right now. So it's you work well in advance, and it just, that's sort of the holy grail for brands, is to be what they call as close to market as possible. So for example, Zara. Yeah. I'll just make this up. If black mini skirts were just flying off the shelf in their stores right now, they would track it. They'd know about it. And the orders to the factory would go boom, boom, boom. And let's get that product into the stores immediately. So their supply chain is from what sells through on the floor all the way to the manufacturing process is really, really quick. And so they can pick up on that trend. Hey, not just black mini skirts. Hey, maybe we need navy, dark blue, gray. Mini skirts is really hot right now, so let's get more colors and different styles of mini skirts out there. So they're able to do that. But they in a Zara store, I don't know, they're probably dropping 20 different collections throughout the year. Whereas most traditional brands, it's like, oh, there's fall, winter, and spring, summer too. So I think those days are that's really difficult, because consumers are looking online every day, every other day, and so they want to see something new. They want to see something fresh. They want to see something different. If you're seeing the same thing every time you go on the website, after a few more times, I'm just not going to bother, because it's kind of boring. It's the same stuff. I can wait a few weeks, but so it's keeping consumers excited about what's new and what's fresh, and that makes it a big challenge. Yeah.
Wait, so something like a Zara with 20 collections a year,
whatever the number is. Yeah.
Or just, how long does it take if they're telling the factory, what, or if it's an H&M, I don't know if that's even one company, because you've worked with so many companies, I'm not sure. How long does it take to get from, how fast are they actually doing this?
Yeah, it's been pretty well documented. I don't remember how long it takes, but you can imagine, it's not just, you just ring up the factory, hey, make more black mini skirts. I mean, you need to have all the materials. You need to have all the trims. You need to have all the zippers. You need to have all the buttons. Yeah, so you got to be, and you think about all the SKUs, all the styles in a Zara store, which is the one that's going to be hot. Internally, I'm sure they know, but then, it's like they put it on the floor and then they monitor what's going really well. And obviously what's maybe going really, really well in Paris may not be going so well in Tokyo, or it may not be going well in New York. So it's not, oh, gee, every store around the world, the consumers are buying the same thing. So they need to be very targeted. Okay, it's black mini skirts in New York are doing well, but it's white fluffy sweaters in Tokyo that we need to ramp up, or in Paris, it's, I don't know, leggings. Well, no, I'm just making this stuff up, but
I've totally noticed that the inventory is different when I'm traveling around. It's very interesting to watch. And
of course, because they understand that consumers are different. You look just here in the United States, from New York to Miami to San Diego to Seattle, the four corners. Obviously, you've got vast differences of consumer purchasing, weather, environment, but then go explode that out further out. Obviously, their home base in Spain to is what's are they out of Madrid? Well, they're in a small town in Spain, but let's just say what sells well in Barcelona may not sell very well in Madrid.
Huh.
So.
That's a really good point as relates to data systems. Has that must have transformed a lot in your experience over the years?
Yeah, absolutely. Early days, it was just tracking. Oh, what did the wholesale customers buy? What did Macy's buy? What did REI buy? What did Dick's Sporting Goods buy? And then it's like, well, that's great. We shipped them 100 red. Well, did it sell through? I don't know.
Huh.
they bought 100, and then it evolved to, okay, we shipped you 100 red ones. Hey, are you selling those through? And initially, those retailers were like, well, it's none of your damn business. I bought this product and I own it. And if I sold it or didn't sell it, I'm not going to tell you. But now it evolved in really good partnership. Most retailers here in the United States, not as many in Europe, but we'll share their sell-through data on what's sold well and what doesn't sell well. So it's all become very, very data-driven of how you plan your production, your SKU productivity. Obviously you don't want to be producing a lot of styles that aren't selling, because that's a significant waste of time and resources. So efficiency. Everybody wants to just sell one thing, as long as it's black. It was just one color in one size. It would just be nirvana. So people in sourcing just want to say just one color. What do you need all these colors for? So.
Well, tell us some names, and this will be like the last question for us. Tell us some names of different companies that you come across that, it's easy for us to be like, oh, I'm going to the mall, I see all these brands, but some of the stuff that's in the background that you think a lot of people might not know. Tell us some names that might be like throughout the globe that we should look for. They're huge companies, but we maybe just don't know them because.
I'll tell you about a small company out of Southern California, Vuori, Vuori. It's kind of hard to pronounce. Vuori, Vuori, men's and women's casual, relaxed apparel, yoga inspired, higher, not so athletic, more casual. It's something that you would wear out to a restaurant as well, or
casual yoga. Is that what it is? Casual yoga?
Yeah, exactly. Elegant yoga, Vuori. Yeah, so I thought that was kind of cool concept. I see, in that yoga space, we're looking at brands like Athleta, that's, obviously owned by the Gap. But it's interesting. I don't know if they're trying to, reach out to male consumers. I think with the name being a feminine name may be challenging.
So they're trying to go the way of Lululemon. It's tough. It is a name. You're right.
Fabletics,
I know Fabletics.
Yeah, absolutely. So I think this is really interesting, and I think which I think has been a really human touch with the marketing of all these brands. It's like, okay, we're not marketing to runway models, because there are no runway. We wouldn't have a business if we were just selling to people who look like runway models, because they are an aberration. So you've noticed the marketing in the last few years. It's real people.
Yeah, I've noticed that. That's a great. I'm glad that.
And I think that's so much more welcoming.
Yeah.
To consumers, and for the consumers to feel not intimidated to go shopping in those stores. And it's just smart of those brands to say, okay, these are your consumers. Go market to them. And so I think that's it's smart marketing. It's a human touch. It's just smart business. from that standpoint. No, there's the sneaker brand out of Switzerland that Roger Federer invested in. So just very simply, On.
I'm seeing it everywhere. It's so
yeah,
unbothering.
absolutely. They set up, so they're out of Switzerland. I don't know where in Switzerland, but they set up their U.S. office in Portland, Oregon, to do sales and marketing. So I think that's something that's quite exciting to see then, because I think in the sneaker world, there's always a new brand that comes up every once in a while and pops up on people's radar screens as something that's interesting. So I think, ON, I think they're listed on the Swiss Zurich Stock Exchange, maybe.
Okay.
So yeah, but that's it's a one shoe brand, or it's a one brand company, I should say. So that's it's either going to hit it or it's not going to hit it. So I think that's sort of the challenge there. And I think what you find is a lot of brands that start off, they're very successful with their home brand, and then they get some capital, they get some cash, and then they start off to invest and they buy up other brands.
Yeah.
So you look at a VF corporation.
Yeah.
Well, if you look at VF, Vanity Fair, that was originally women's lingerie.
Yeah.
Which by the way, they don't even do anymore. So what's in that portfolio is, I think Vans is its biggest brand today.
Yeah.
Obviously, North Face, Timberland. They just bought Supreme, so I think that's kind of interesting. So I think in that space, probably VF has done a very nice job of being very agnostic as an umbrella holding company, because it's not like they're trying to make North Face be like Vans or Timberland be like North Face. It's like each brand, they respect the DNA of each brand, so it's pretty well diversified.
Through COVID, they did an unbelievable job. It seemed like from a company perspective.
I thought the Supreme acquisition was curious, and if you looked at what the price they paid.
Yeah, it was kind of because everything's so outdoors, and then Supreme's kind of this different sort of street.
City street fashion. Absolutely. But if you ask, I constantly ask my kids are in college, what's hot, what's not.
What are they telling you?
Changes. The brand. It's really fast to keep up with this stuff, May, because the wind blows. And if your business is reliant on, a 16 to 25-year-old consumer. Surely what they're buying today is what they're not going to be buying 12 months, 24 months from now. It changes so very, very quickly. So I think that's sort of the challenge, danger of buying into a stock or company that's hot today.
Yeah.
So,
Well, this has been awesome. If you are watching this on the YouTube channel, please do subscribe to the station. And also, if you own any of these or you have an opinion on any of these brands, I want to hear it. So please definitely do put it down below. Until Monday, good luck out there. Bye, guys.